Do you want to?
Are we doing a couple minutes behind? Good morning.
Good morning.
We got a full house today. Okay, well, for those that I haven't had the opportunity to meet, I'm Kelsey McKean. We're with Chicago Title. I oversee all the business development for the Woodlands office right next to the Woodlands Mall. Lacey Beals, our branch manager, and Debbie Powers is one of our escrow officers. So today we're going to be talking about CFPB. Everybody excited? Yeah. Who has sat through more trainings than just this one? Multiple. Who has sat through 2 trainings? 3? Leslie, have you sat through 3?
Is it that hard for you?
No. Okay. So I wanted to kick it off, keep it kind of light and bubbly. There's some agents that I'm going to try to keep it light and bubbly, Maria. There's some agents that, like Leslie, have done 3 trainings, and there's some others that haven't really started focusing on it until now. So I want to kick it off with just a quick introduction of what is the CFPB, and it's actually going to be done through an animated video, just so that it's a quick explanation of what the CFPB is. Oh, I hope it's not too loud.
Federal law requires all lenders to provide several different disclosure forms from several different agencies to anyone applying for a mortgage. The problem is, these forms are kind of similar, but a little bit different, and most people don't really understand them. So, to simplify things, the government, through a bill called the Dodd-Frank Act, created the Consumer Financial Protection Bureau, or CFPB for short, to ensure that only one agency is accountable and responsible for protecting consumers. The goal was to make sure the new disclosure forms aren't confusing, that people understand what they're signing and what fees they're paying, and that they know their options to shop and compare certain services. In other words, no more surprises at closing. Okay, so here's what's new. The CFPB eliminated the good faith estimate and the early TILA form and introduced a new loan estimate. They also ditched the HUD-1 settlement statement and final TILA form and replaced those with a brand new closing disclosure form. And voila. And finally, there are new rules about when these forms must be delivered and how long consumers have to review them. These changes go into effect soon. So, make sure you know before you close. Forms, dates, rules, and laws, it can seem like a lot to take in, right? Well, the good news is that we've done our homework, and we're here to guide you through it. To learn more about how the CFPB changes impact you, contact a local representative.
Everybody good? We're done training now? All right. So Lacey and Debbie are going to go into a little bit of details. We really want to keep this open-ended. Our motto is going to be business as usual as soon as October 3rd hits, and that's going to be our goal. But today we want to keep it open-ended for answering the questions that y'all have and just kind of going from there. You want to take over?
Okay. You want to go first?
All right.
So, what is Consumer Financial Protection Bureau? I'm so thankful for those videos that our marketing team created, because it just kind of makes it all fun and simple and easy. And, I'm sure, like Kelsey did a little survey, we're setting in as many trainings as we possibly can, not only on our corporate side, but also lender trainings. So as many lender trainings as we can get into, we're setting in those ourselves, because ultimately this is a lender change. And this is just like any other lender change. It's going to affect the lenders, which means it's really important for you to have your business partnerships in place and make sure that the lenders that you're working with are prepared and know the timelines and the delays and things like that that could happen, so that we want you to be prepared as possible. We've been working on this since 2011, 2012, and so we are definitely ready. So, Consumer Financial Protection Bureau is what CFPB stands for. We have lots of new acronyms and new terminology that gets introduced, and so there's jokes. Is Sissy here? No. She's got some good ones. Independent Bureau with the Federal Reserve. And so everyone who is an employee with Consumer Financial Protection Bureau already works for the government. You have to work for the government in order to be employed by the Consumer Financial Protection Bureau. And it's self-funded by the fines that are going to be placed. And so that means they're going to be issuing those fines, and they're going to make sure that everyone is in compliance. What does it regulate? So bank accounts and services, credit card, credit reporting, debt collection, mortgages, money transfers, and more. From what we're hearing, or the initial conversations that came out with Frank Dodd, everyone thought it was about credit, credit cards. And then it was like, oh yeah, mortgages are involved here. And here went the real estate industry with all the papers flying in the air, like, oh no, what's going to happen? The world's going to end.
And I did want to touch on really quickly, so the first 2 pages of y'all's handout is going to be what is CFPB, or actually should I say the second page in the back. And what these slides are, these are just going to be an in-depth view at what you have on those first pages, okay?
Yeah. So it's starting October 3rd, and that's a Saturday, so we're going to have that Monday. And this is loans originated that day. So that means if you have October closings that were originated in September, it's going to be business as usual. You're still going to see the HUD statement. You're not going to see a closing disclosure at closing. Okay. Penalties, I touched on this. You've got $5,000 to $1 million in penalties that are going to be assessed. And this is how the employees of Consumer Financial Protection Bureau are receiving their salaries. So you can expect penalties to be put in place. Transaction types that are affected, so your purchase money, all of our transactions that we typically handle, refinance transactions, 25 acres, vacant land, construction only, timeshare. So the things that are not affected by the closing disclosure in the Frank Dodd Act and Consumer Financial Protection Bureau are reverse mortgages, home equity lines of credit. So if you're putting in a pool, or you have a customer that's putting in a pool and they get a line of credit, this is not affected by that. Okay, so it's going to be your normal transaction with your bank. Mobile homes and creditors who initiate less than 5 loans a year. So that means like your seller financing or your small private lenders. Okay, so the HUD isn't completely going away, but you're going to see it fewer and fewer, unless you do a lot of mobile home transactions. So, anyone like those? Yeah. New forms. So, like the video showed you, we're out with the old and in with the new. The good faith estimate and the early till disclosure are now the new loan estimate. And so those are the forms, or that is the one form that your borrowers are going to receive, your buyers when they become borrowers, if they're getting financing. Has anyone seen a new loan estimate? The first page is a lot like the closing disclosure, which we're going to pass out to you. It's kind of easy, simple to read with the loan terms, loan interest rate, payments. That's what your borrowers are really looking for. How much is this going to cost me, and what are my payments going to be? And then the HUD and the final till are replaced with the new closing disclosure. And so this is what the lenders are going to be giving to their borrowers as their final amounts that they need for closing and what their fees are going to be. At closing, we are going to use a master statement. So your borrowers are going to sign this, but at closing, we're going to have a master statement. And some of you may be familiar with that. We've been using them for years on cash transactions. This is what everyone's going to sign at closing, buyer and seller. And so you can have this in your file. We'll have this in our files as an acknowledgement of everyone agreeing to the terms of the purchase contract. Yes, ma'am?
Only a Chicago title, or is
Everyone's going to, in Texas, is going to have some type of form like this. And the reason is because you need a signed document. This is a signed acknowledgement of receipt. It's not an agreement to the terms. So this is agreeing to all the numbers. Everyone should have this form. This is what we're going to go through at closing. We're really not going to focus too much on your closing disclosures or your seller's disclosures or anything like that, because like I said, this is the lender form. And so as much as we go through the truth in lending now, which we do, but it's small. 1 second, sorry.
That master statement that she's showing you is so easy to read. It's just a list of debits and credits for buyers and sellers. And it's just really an easy to look at the transaction and go through it. Even more simple than the current HUD.
Right, yeah. 2 pages instead of 5. you know, that you're used to looking at it, and everything's on one side for sellers and one side for buyers. So it is very easy and simple to read. The new loan estimate, you know, goes through the same terms, the closing disclosure. Sorry, Kelsey.
Oh, which one you want?
No, it's okay. The line numbering. Okay, so this is going to be the biggest change for us, is that there's no numbers. So there's not going to be a reference to 800 section or 900 section or 1100 section. Now they're alphabetized, ABC, and they're in different categories with subcategories that roll up. So, yeah, that's why I have this form to simplify the terms, and then your closing disclosure is just going to be a lender form.
That just goes into detail.
Yeah, more about the CFPB that mandates the charges. The title fees may be adjusted at closing, and I'm going to let Debbie go in depth with this on for you.
Okay, to me, the title of this was a little, was a little confusing because it says we're gonna adjust something at closing, but what it means is the way that it's reported is changed. So the CFPB has changed the way, especially here in Texas, that we're showing our title insurance fees. And the specific on that is that at this time, when you have a transaction where there's an owner's title policy and there's a separate title policy for the mortgage company, right now the law is that there's what we call a simultaneous issue discount, and it applies to that mortgage title policy. Well, the CFPB has changed that, and now that discount is going to apply to the owner's policy. So the way that it's shown on that closing disclosure will look different, but the bottom line to know is everybody's still going to pay the same fees that they pay now, because there will be a mathematical equation to reconcile so that the seller, which most of the time they pay for the owner's policy, the seller will reimburse the buyer for the difference in that discount. So it's kind of hard to imagine that without seeing it on paper, but the main thing to know is even though they're changing the way we have to disclose, everybody's still paying the same thing they do now. So if a seller pays for the owner's title policy, even though the discount applies there will be a mathematical equation to rectify the difference in that.
Does anybody have any questions on that? It's kind of hard to wrap your brain around.
Right. So now you just see it as the owner's title policy costs a lot more than the mortgage. But on the new CFPB, it'll be opposite with another credit from the seller to the buyer to make up the difference. Okay, preparing the new closing disclosure. What we're hearing from most of the lenders is that they are going to take point on preparing that document. It is a lender document. They do have an option to have their title partners prepare it, but because of the stringency of all the new rules and for their them being the ones who, lenders being the ones who will be fined for non-compliance, they're going to want to make sure that they're doing it themselves and giving that document to their borrower within the right number of days. So we will help them, and on our end, the way that really all of us, title and realtors, the way our jobs change is to get all the information to those lenders up front. In fact, some of our lender partners have said during the option period is best. So optional items that they have to choose, insurance, they need to be shopping for that. A lot of times on the HOAs, when we have to order those HOA statements, we need to get that done ASAP so we have those fees to give to the lender.
Home warranties, even they've expanded that. Make your selections and say who it's going to be ordered through so that we can go ahead and do that during the option. So the rat race now is at the end of the transaction. Come October 3rd, it's going to be the beginning of the transaction. The beginning of the transaction is really where the lenders are going to need everything finalized and put together so that the closing disclosure can get out those 7 days prior to our consummation date.
Right. Other things that they're saying is a lot of times we'll get, oh, you know what, the seller didn't ever get the option check, so let's just take that off the HUD. No, let's not, because we really need to have our final numbers match what was on that contract. And so getting that delivered it's always been a time of the essence, but even more now. And as soon as we can know if we're gonna need a power of attorney, because there are a couple of fees, like recording fees associated with that, or if it's a mail out, so that we can get all of that information over to the lender ASAP.
And homeowners insurance is a big one that the lenders are really hitting on in the trainings that we've, attended. Homeowners insurance is one of those last minute things that it always holds up the closing instructions for us now. Homeowners insurance really needs to be finalized as soon as possible within the option.
Okay, so we kind of talked about it's a lender form, they're going to be disclosing it to their borrower.
And we've all drafted or created these integrated systems, so the title company is going to be able to communicate software-wise internally with the lenders so that some of the information can be transferred right over. So say your lender's preparing the closing disclosure, that they're going to put stuff into their system that's then going to integrate into our system, so information is going to flow over, which will help with, we're usually in control of preparing the HUD and now we're not, and so we make sure that all that information gets transferred over in the correct category.
Okay. Changes to the closing disclosure, that's gonna be up to the lender who does that. If it's something last minute that's not going to affect their delivery and waiting period, we feel like they'll probably have the title company do that and just send them to them for approval like they do now.
Right.
But again, it is each lender with their own underwriters making those decisions as to who handles what part of it. Oh, and now we have our
Delivery
our delivery times, which everybody's heard about this. There's the chart shows that there's a 3-day waiting period, and so what we have heard from most lenders is the only way that can be waived is if it's hand delivered. So if you've got a local lender who's in contact with the borrower and they can hand deliver it, then there are times when that 3-day waiting period can be waived. Otherwise, if it's delivered by email or snail mail, they still have to wait that 3 days before we can schedule I think we're still gonna call it a closing, but the new term is the consummation date.
Consummation date.
Yeah.
We're hearing from lenders that they're going to err on the side of caution and always go with this 6 days, 3 days delivery, 3 days waiting, and then are closing the next day. When possible, they are working on systems like DocuSign where there's a timestamp delivery so that email is an option. And then even the local lenders that we've attended trainings with are saying they're not really going to put the hand delivery in their normal routines unless it's absolutely necessary. So the 6 days is what we're working towards with the lenders as a, prepared closing consummation date. So you see the darker green date, that's the first day your closing can occur. So if your closing is scheduled for the 9th, the closing disclosure needs to be sent to the borrower on the 2nd for those waiting days and delivery days to begin.
So, and Saturday counts, but Sunday does not.
Right.
So that's why the extra day in there.
And we're hearing that more and more lenders, I see this now with Wells Fargo, but more and more lenders are going to be simultaneously working with title and working on the closing disclosure at the same time that the file is in underwriting. And so that they can accommodate this, extra day time where, usually you've got a 4 o'clock closing, we get instructions at 9 o'clock in the morning and, we're working on getting it all done. So they are saying, and this may come up later, that you may have a borrower who receives more than one closing disclosure. And that's because the file's in underwriting and we're working on the final closing disclosure. So if there's a change in underwriting, we may need to issue another closing disclosure as well. So don't be alarmed if there's more than one, but
What if there is a last minute extension, you're closing tomorrow and all of a sudden, oh my gosh, something hit the fan and you
yeah.
have to close like in another 2 or 3 days?
With a lender or like a buyer-seller
Buyer
extension?
situation.
Yeah, then we're just gonna have to put those into the timeline. Of course, if there's a delay that works more in your favor, then the buyer's going out of the country and they need to close on the 20th instead of the 25th. That's gonna cause more of a hurry up and scramble and make sure we're
But
together.
does the timeline start again, since some lenders only allow their documents that they've written to be closed on the day they were written? Do we start the timeline again?
It's possible that we will.
Okay.
What we've learned over these last 2 years, and especially this year, is every underwriter is going to have their own set of rules within the guidelines.
Okay.
So you're going to have more conservative, and then you're going to have your more lackadaisical people that are going to push the limits as much as
So
possible.
to set client expectations, it could go either way and let them know.
Absolutely.
Okay.
Yeah, and that, I think for you guys and for us, we really just need to push to say, I know you're within the option period and you're still, testing this out to see if the, inspection is clear and you really want to buy this house, but all of these things really need to be finalized within your option. And so after that, it's the lender working on getting the underwriter to approve the loan, not so much waiting on the buyer to still get them the stuff.
Right, we need to be operating under the assumption that everything's going forward, so
Yes.
that we're not holding things up if it doesn't.
So when writing a contract, we need to inform our clients that even though they may close on the 9th, they would not be able to move in until the 13th. Because it looks like it would not be,
That's on a refinance.
oh, okay.
So on a refinance, there's a 3-day right of rescission.
Okay.
So resales are still going to fund the same day as they typically do, unless of course you have a local bank that requires originals and, and those unusual circumstances.
Okay.
Yeah.
Yeah, I can't read that little print.
Yeah, it's a little light.
It's gonna be on the printout, a little easier to read there.
Well, I can't read that either, I don't have my glasses.
Oh.
There you go. And y'all
I
touched
understand.
on what exactly, will the CFPB delay my closing? On the last page in y'all's handout, it kind of touches on the different changes that would actually add another 3-day waiting period. And it talks about how there's a lot of myths out there right now and a lot of misconceptions. And we're gonna touch on that here in a little bit too.
So appraisals are gonna be ordered during option period, and so
Yes.
that is a potentially, buyers could lose the money for the appraisal
Inspection too.
and inspections if they opt out.
And their
during
option.
And survey, is the survey going to be ordered during that time?
The
as well?
survey, yes. So, now more than ever, and I know this is kind of like beating a dead horse, but the more things you can get done before you have a contract, the better. So if your buyer is shopping a loan, I know now you get these, pre-approval letters and things like that, but if they really are working directly with a specific lender, they need to get all of their bank statements, all of their everything. And if you're on the listing side, then that means, getting your T-47 signed at listing or give them, to the clients at listing, and we're happy to notarize them if they want to just drop by anytime.
So they're gonna have
Those
to
kind
write a
of things.
check to you up front, right, for the survey?
For the survey, no, they don't have to, but if the contract cancels, then we'll deduct the survey cost out of the earnest money.
Okay.
Yes, yeah. And so this is another point that I'm just adding with that. I think it's going to be really beneficial if, especially in the event that you cancel a contract and you need to write another one, wire transfers or cashier's checks for earnest money are going to be very beneficial so that there's not that 10-day waiting period, because we are required by law to wait 10 days for checks to clear. And so if the buyer can supply wiring or a wire transfer or a cashier's check, then that waiting period goes away. So in the event that you do need to cancel the transaction and move on to another one, we can transfer those funds internally and not have to wait on that, them to write another check.
Could you say that about the survey again? I didn't catch that, like if you have a listing and if they have to get a new survey.
Well, so in regards to the listing, it's get the T-47 and the survey, the prior survey provided to the title company and the buyer as soon as possible. If there needs to be a new survey, then that's going to be a cost that we're going to go ahead and process and order the survey during the option period. And it's lenders are telling us that they will not order anything, appraisal included, without a signed acknowledgement that the buyers intend to proceed with the loan. And so that's going to be one of those factors that's gonna go into play with the survey and the appraisal.
So who's responsible for doing this? Because right now we get it at closing. Do you intend to proceed halfway through the closing? Or are you guys gonna start sending it to us once you get the contract?
The lender, yes, it's going to be a lender, yeah.
So what about the walkthrough? I mean, I've heard that you should do your walkthrough, 2 weeks prior to
Right.
closing.
Yeah,
But sometimes that's difficult.
exactly, yeah.
I mean,
NAR was putting out stuff pretty early on that they are saying, to avoid closing delays or changes at the closing disclosure, changes at the closing on the closing disclosures, to do your walkthrough just to make sure repairs are done, a couple of weeks prior to closing. Of course, you can always do a final walkthrough, the day of closing, but it's going to be, yeah.
And
It is,
that
but,
what we're hearing more now is that's one of the things that may not cause a delay.
Right.
So it's it's gonna be up to each
What if
lender.
the house floods the day before?
right, yeah.
That's,
Well, and it's not
walkthroughs are
to,
mainly not for repairs.
right.
No, it's,
You gotta go
Yeah.
check, make sure that house is still.
Yeah.
when they moved out, they
Well,
knocked
how many
them all.
closings do you I know how many closings we have and repairs aren't completed. And so, that is just the focus on repairs. If there are repairs to be made,
If that's the
to make sure
reinspection,
those are
that's not the
done.
walkthrough.
right.
so a
Yeah.
seller's contribution
Mm-hmm.
in lieu of
Repairs.
repairs, and that has to be a known fact
Yes,
As soon as possible.
as soon as possible.
right, right.
Okay,
And
Delivered to the
many
lender.
lenders don't wanna see that wording now.
Right.
All right, question. I work
You
with
just
I work with a
close it.
ton of veterans, so we know there's only one or two VA appraisers in the city.
Uh-huh.
How's that gonna work out if we have to have all this stuff done within the option period? Because it typically takes that VA appraiser 2 to 3 weeks to get out to my house. And then, so that's gonna delay my closing from a 30 to 45 day to what, a 60 or 70 day? Because we've got 2 in the Harris County. I think we have 1 in Montgomery.
Wow.
And they're always a 2 to 3 week appraisal date for me when I have my veterans.
Yeah.
That's gonna throw this whole timeline way out of whack.
Right.
And then you're gonna have, it's just more complications I can lay after, but how's that gonna affect when the appraisal's not gonna be done in 10 days?
Mm-hmm.
Cause it's hard to get a conventional appraisal done.
Well,
Sure.
yeah, I was
Yeah,
just gonna
and
say,
it's
what are your
not-
lenders telling you they want all this
Yeah.
done in the 10-day period? Granted, they're asking for it,
Sure.
but it's their responsibility to get the appraisal done during the 10-day
Absolutely.
period, which they haven't been able to pull off ever.
Right, yeah.
And then furthermore to that
So-
point would be the VA or FHA required repairs that come in after the appraisal. Then the seller's gotta have that done too. Call me pessimistic, but I don't see how that's ever gonna happen. It takes weeks to get that done on a normal deal now.
Right.
I mean, these laws are kind of making it real hard for a buyer to buy a house, is what it sounds like to me.
Did we mention it's government officials?
Well, you start off with that, and we were screwed, so.
Yeah.
I think the answer to that, for that question, for you and for me, would be practice will make perfect, right?
Right.
We'll see how it plays out.
Mm-hmm.
And I would be prudent enough to say, you know what, instead of 45 days, so let's just do 60 days.
Yeah.
And work with that and see how soon you can get it done.
Yeah.
Especially during the first
It
few
also
months.
depends on the lender. Some
Yes.
lenders drag their feet, some lenders are really good and proactive, and they get their stuff done, and they don't need that long. I mean, I have a lender right now that's closing me in 2 weeks. Every single one, in 2 weeks. And she's really good, so it'll be practice make perfect.
Share that information with them.
And what we're gonna see is tight at the beginning, like anything new.
Right.
And as we go through and everything shakes out and we see
It's a learning
how it
process.
goes, it'll loosen up.
Leslie, then Maria.
Didn't, I went to Cherry Creek, and they spoke, and they said that things like just the repairs are not going to affect
Right.
the closing disclosure, so therefore, those kind of things, those changes can be made up until the very end, because they won't be affecting the closing disclosure.
What they're saying now is it's APR affecting changes. So what affects changes for the APR now is what's going to affect then. They also said, but please don't make changes at the closing because any changes are possible at closing or say after the 3-day delivery period and 3-day waiting period. But each change does still need to go back to underwriting, and the underwriter does still have to review it and approve it. And so, yes, changes can be made, but it may take a little longer to get the funding approved for those
I
changes.
guess we just have to be real cautious on the timeline, because once you hit that closing date, everybody's trying to move, right?
Yes.
Everybody's got everything planned out, and it's just gonna be.
Yeah.
And to touch on Leslie's, that last page here is kind of what Leslie was just talking about on the very side. Those 3 things are the ones that are going to delay that closing another 3-day period.
Right.
This may be coming later, but I sat through one of these already, and they emphasize that those fees and penalties apply to realtors as well, and we are so out of control.
Right, yeah.
Is that
The
true?
closing disclosure is going to, one of the pages, and maybe we'll pass these out now. One of the pages asks for everyone's license number. And there's a complaint, like an online, I'm sorry, database.
Oh, yeah, sure, I'm so sorry.
Need to know what it is.
Just so everyone knows, I did plan for 20.
Put it
But
in your smartphone.
if I can get contact information, I'll be able to email all of this information out, all of these documents in PDF, etc.
I have a question about CDAs. How, I mean, typically, you like to wait to turn it in until you know that it's actually going to close.
Right, yeah.
Is that not, I mean, now, does that fall within the option period of time too, that they want that? I mean, I know that's more of a seller
Yeah.
side than buyer.
The only thing that lenders have told us in regards to realtor commissions is if you have a transaction fee or you have a contribution that you're gonna be giving to the buyer, those kind of things we need to know about in advance. You know, and if you issue an early CDA, we have one broker that issues CDA pretty much like second day of contract. You could always send a revised one, but I'm not sure if that's something that, you know, everyone wants to go through the hassle of. So, yeah. Yes, sir.
Do you by any chance happen to have or are working on a customer-friendly version of this that we can give to our clients, especially buyers, at the start of this process to help them
Right.
find their way through the maze?
Yeah. Yes. We are working on a checklist, and the lenders are too. And so we'll follow back up with you on that because the lenders are going to have a checklist in the trainings that we've attended that are like, okay, we need all of this, and this is the time we need it, and if you don't give it to us, then you could
Right,
have a
because
delay.
this is really all about setting expectations to keep
Absolutely.
the process smooth, and if
Yeah.
we can have this over day one,
Yes.
it will help all parties.
I agree completely.
Yeah, and some of the videos that Kelsey has for us help with that too, because just like the first one that we saw when we got
Yeah.
here, it makes it very simple, you know, in a non-scary format that lets everybody
And I'm
understand.
not opposed, if you guys can share it, that's great to send out to a client via email and say, hey, just take 2 minutes and look at
At
this.
the end of this presentation, I'll actually give you access to a website that pretty much has all of the CFPB information that you could ever possibly need, as well as access to all, I think it's like 12 of our videos. So it's literally a website that you can actually share with your clients, and it is for you guys to look at. It has all these documents on it, it has all of our videos and all of the CFPB resources.
Okay.
So I'll make sure to get that to you.
Speaking of that, one of the changes also is that the CFPB is requiring that title insurance be listed as optional on the closing disclosure. So one of our videos explains and helps is something that you can provide to your customers to tell them how important it is to have title insurance, whether you're a seller or a buyer. The buyer wants to be protected, that there's not someone out there with claims to the property or a lien, and the seller wants to not be the one that the buyer comes back on if there is something there.
Right.
So it protects both sides. And the video that we have may be easy to pull up real quick, but it tells them why it is an important thing to have.
Yeah, so these are just a couple of the videos, and this is actually on that website that you'll have access to. These are some of the videos that are beneficial for you as an agent to learn and to look at, and then there's also some on here that are beneficial for you to utilize for your clients.
Oh, it did something.
Bye.
And some of these videos, certain ones, we're sending out a link with every open order package. So when we send out the receipt of contract, we send the link to the consumers, both buyer and seller, of what is title insurance. So they can click on that link and they're receiving that information as well. And it's just like the first one, fun, animated, really cute, with pushing property lines and easements back and forth between neighbors and that kind of stuff.
I have been asked in closing several times what title insurance is, so it's good that they know up front who we are and what we're doing.
What is title insurance?
It's a box you
Seriously?
check on the contract.
It's a box.
Yeah.
It's a necessity.
Wow. So, well,
We went dark.
welcome to our little
Yeah.
our little
I
guys.
will pass these out, maybe? Did you get these? Kelsey's gonna email this stuff to you too. Kelsey, are you taking business cards or something?
Yes, definitely.
Head count.
Aha!
Who got it, who didn't?
Yeah, we want credit for this, so we don't come back.
Because things had changed.
Being honest.
Okay, I don't blame you at all.
August first, or something like that, and then that never happened.
Right.
I know that I understand that there were some changes.
I did this now.
I think
Now that we're in this process, so can we point out,
Okay.
what are the significant changes
Give
from
it a
last
go.
month?
Okay, Sherry's asking a question, so I'm gonna restate it so everybody can hear. She's asking us, have there been any changes that we're aware of from when this was supposed to start August 1st to now it's starting October? And, my answer to that is, I think one of the big changes is that we've had more time to understand how this is going to affect all of us. So there's a little bit less misinformation out there. One of those things that we understood from the very beginning is that any kind of change on your numbers could delay your closing and have to redisclose. And now we're hearing that that's not necessarily the case. It should be just things that affect the APR that you would have to redisclose and wait that 3 days. So things like you go to the walkthrough and the mover kicked a hole in a wall. That sort of thing could possibly be adjusted without waiting the 3 days. It just might delay the closing time while they get approval to have a credit. So I think the main thing is that there's been more time to understand what the requirements are and not have as much misinformation. Maria?
How does the new timing affect those people who are way too busy to attend their own closing?
Right, and that's one of those things that we need to know as soon as possible, hopefully during that option period, if we're gonna do a mail out or a power of attorney. Maria's question was, how does it affect people that can't come to the closing? There are some, I'm gonna be PC here. She said too busy to come to the closing. So,
The consummation date is the day that the mail out occurs for the borrower. So the consummation date is the day that they sign their documents, which means if we have everything ready ahead of time and they sign 2 days before the scheduled funding, that is the consummation date, and so that affects the timeline of when everything needs to be ready.
So only one party's gonna sign before the mail out. Say it's,
I would say that is still your consummation date, because that's the first signed agreement.
and so once it gets back to you guys,
Mhm.
it's
Right.
executed, completed, it will be past that date, but
Right.
still okay.
And we would have a separate funding date.
right. And I think that's what they mean by saying sometimes the consummation and the closing are different. Because consummation always is describing when the borrower signs their loan documents. That's when they become liable for that loan. But it could be a delayed closing date or funding date if it's a situation like it was a buyer mail out. And we're not closing with the seller until the next day mailing.
So you can make your dates per the government's requirements without all the super.
Right, as long as we have our numbers in line first. No changes on the numbers. So, And that's another good reason why we need to know about powers of attorney and mail outs as soon as possible, because there are fees for those. Powers of attorneys, we have to record that document with the county, so there's a recording fee. And for mail away closings, there's a mobile notary service fee for that. So those are things that we have to know about so we can let the lender know.
Emergencies are really not an issue.
Yeah.
So the lender documents would be sent to the consumer, right? Okay, and those documents signed. And then those documents would be sent back to the lender.
To the title company.
Well, back to us.
Or back to the title company. Is there timing involved there as far as the consummation?
The consummation is the day they sign their documents.
Okay,
Not the closing disclosure.
so not the closing disclosure.
The loan.
Right, that would have already been given to
Given
or
to
by the
them.
lender, yes.
Okay, gotta keep up with these.
I know. There's the terminology video.
Yeah. Okay, so just to loop back to these video, technology hates me. Oh no.
Wow, you changed yourself on that one.
Okay. I'm like, please don't do this to me. But if everybody could leave their business cards behind on the way out, like I said before, I'm going to email all this information, all these documents, as well as this is the website. If you don't have a business card, name and email before you leave. But these are some of the videos. We're actually currently utilizing some of these, such as what is title insurance. So as our open order packages go out, what is title insurance is actually included as a link if they want to learn more about it. Very beneficial for those maybe first time home buyers and sellers. And it's a cute, short, 1-minute video, keeps it light, all the way to where a new buyer can understand title by the time 60 seconds is up. The other one that's currently being utilized is what to expect at closing. So one of the biggest things that we've been asked by a lot of agents is we wish that title could be explained by title. So what to expect at closing is now going out with our title commitments. And that's a short 56-second video that kind of talks about the things that are going on in the background while they wait before their closing. Okay, so the beneficial videos that will come into place to help explain why title really isn't optional to your clients is number one, the what is title insurance, but then number two, what to look for in a title company. So this is just kind of helpful information for when they ask, why Chicago Title, or how do I make my decision on what title company to use. This is a short video that kind of talks about the importance, the financial backings, etc. And then this is the fun video that's beneficial for you guys that hopefully has sound. I'm muted. What's over there?
You just muted it on the computer.
It's on the
I
computer.
know, but I'm unmuting it on the computer actually.
Did you turn the volume down and not mute?
Oh, come on. No, it's just not behaving. Alright, so like I said before, these videos will be emailed to you and you will have full access to them. Mr. Frank Gray's technology is not liking me. I'm gonna try one more thing.
It talks about the consummation and the closing and
Yes,
Yeah.
we'll go through the dates,
Oh.
yeah.
So it does talk about all of the fun terminology.
As far as the,
Does anyone?
competition now between title companies,
Mhm.
it was always that way where I came from. I found this very refreshing because it was easy. But it was really just like real estate would do with if you wanted to recommend another vendor like an inspector.
Right.
You'd give them free sheets.
Right.
And it made the explanation just became part of the pattern. And here it is, if the bank wants it, she can use it too.
Right. Yeah. Kelsey, do you want me to pass those out? Do we have enough?
And speaking of that, Maria, she's talking about choosing vendors, choosing title companies, inspectors. Well.
Oh, they changed the rules, did they?
No, they didn't. They didn't. But what I was going to say is that with the CFPB, they do have, lenders do have the option to nix a certain title company if they feel like they haven't
Can you
been.
reverse?
Yeah. If they feel like they haven't been complying with the rules. So we have already seen that.
Yes, we have. Yeah,
So-
lenders have chosen or said they won't accept a title policy from a certain title company, and so we've received contracts after, the process has already begun and all of that, and had to transfer earnest money and everything because the lender would not accept the title policy from a
Do they
particular
have
title
grounds for
company.
that? I'm just curious.
Yeah, I mean, they're issuing the loan, and so they have a lot of skin in the game, and so they do have that power to make the decision.
They can say this is not stable enough.
Right.
Or they just
And usually
won't
they
accept.
act on prior experiences, and claims that may have come up and stuff like that. Yeah.
So we get Saturday as a working day.
Yes.
I'm glad the bankers and everybody's joined us.
Right.
If for Sunday, then that'd be great too.
They'll be there.
What about holidays? Are they traditional bank holidays, don't count in the calendar?
Oh, no.
Okay.
Holidays do not
So
count.
bank holidays, which are different than everybody else.
Right, yes.
Stanip has just given to me.
And that is when your trade wheel comes into play. You have to have your glasses on to be able to read these dates. However, this kind of makes it easy to understand when the first day that you can close is. Because what it is it's a wheel.
So convenient.
Kelsey, answer for that.
Put those glasses on. But what it does is actually the wheel does not include Sundays, and it does not include the holidays that are not counted as a business day.
Awesome.
So as you look at it, it talks about the day that it starts, if it's hand delivered versus being electronically signed, the first day that you can close. If you need it a little bit larger, it's on the back, but you still need your glasses for that one too.
Rebecca's
I need to get like a seat and say, put the date on there, cool, you can close on the
I just can't
13th.
wait to put
Yeah.
that out in front of clients.
Well, maybe keep it under the desk.
That's like
I might run out tired.
Insurance.
So everyone agrees 45-day closings, unless your cash is king. How many cash buyers do we have?
Yeah, right.
Maybe Chicago Town should
I've got
create an
two.
app where you just plug in a date and it gives you results so that we can see it on our phone instead of looking like.
That's a good
This
idea.
is really scientific.
We're in art class, like, hold on, when do we want? Alright, you're closing this day right here. Yeah, there's. I just see one black line going around the edge.
I'm not sure you should be walking around without your glasses.
It's actually just one of my eyes that's bad.
Yes, ma'am.
Maybe I'm the only one. And I've been
I'm
out
sure
in the
you're
loop a
not.
I'm
little
sure you're not the only one.
bit. I'm confused on why they have to have 3 days, why all this started.
It's Frank Dodd, and so the whole reason that it was created is for easy consumer shopping and making sure they're getting into deals that are right for them and not into a situation, where they can't afford it and there's a better interest rate out there and all of that stuff. The things that we experienced prior to the 2010 HUD, all of that stuff. So this started in 2011. The new HUD came in 2010. We were working on that in 2009. So this has all been in the works since then. And it's just one step further for better consumer protection and for them to be able to shop loans without being tied into a loan before they're ready and they've had that opportunity.
Closing the 3 days, that's what I mean.
Right.
They've done all their homework, we've paid all this money out,
Right.
we've got the house,
Yes.
and they're gonna lose the money if things don't happen. But 3 days before closing or whatever it is,
Well, the
they
loan
have the right to
estimate-
shop.
The loan estimate is really where they have the right to shop, not the closing disclosure. The
They
loan
get that.
estimate comes out in the beginning of the transaction.
Right, but why the 3 days at the end, that's what I'm saying. That doesn't refund.
Yeah.
That's.
No, it's
that's
all-
after.
it's all-
It'd be great, it'd be good to have a good explanation to that question, because buyers are gonna ask.
3 days.
Oh,
Sellers are
definitely.
too.
Yeah.
So what's the exact answer?
The simple explanation is, it's the government protecting us from ourselves. So, really, it is. It's supposed to give that consumer more time to consider what they're doing and not feel pressured.
At the risk of losing a lot of money up front if they change their mind.
Right. It's just like refinances. You already own the house and you're refinancing from an existing loan that you're already paying and you're getting a new loan and you have to wait 3 days after you sign before that becomes official. At least our funding date can still happen on the closing date. There's just a lot of preparation before that date arrives. Yeah. Yes, sir.
Okay, so if this date timeline includes Saturdays, does that mean we're gonna be able to do closings on Saturdays?
It does not. No.
Wow.
Not for the norm. The banks aren't open, or the Federal Reserve is not open on Saturdays. And so we typically fall in line with the Federal Reserve. If wires can't go in and out, no business can be finalized.
So that's gonna be a question customers have. If Saturdays are included in the timeline, can they close on Saturdays?
Right, yeah. With the mobile notary, you can.
Yeah, or we,
Do you know any of the
there's-
people that are making these rules? They need a good realtor.
Yeah,
A
they
real
do.
good realtor.
It,
Oh,
yeah.
well, what can you do?
Well, and what Lacey said at the beginning, they were already government employees, so they weren't involved in the real estate industry.
Now, can you explain in short terms why this took place? I mean, just, what's the whole explanation? To protect the consumer
Yes.
To protect the consumer.
or to give more money to the government?
Both.
Both?
The answer from the CFPB would be to protect the consumer from predatory lending. So they have more time to shop and to know exactly what their final numbers will be in an easy to understand format.
Thank you.
Did I do that good?
Yes, you did wonderful.
What other questions?
I've heard that before.
Yeah.
I've heard that before. But apparently it hasn't been working in the past. Is that correct?
Correct.
We're just
Yes.
we're working further and further to get there.
And you know, once we get past the getting to understand how this is actually going to look, there are some things that can be good about this. You know, at this point in time, getting our instructions at 9 o'clock for a noon closing and everybody having a heart attack and a buyer that needs to get to the bank and a seller that has another closing that afternoon, it's no longer gonna happen. We're gonna know.
So basically,
Thank you.
on earnest money, you're recommending, and it should be that they get a cashier's check or have the money wired and no personal check.
It's not a requirement, but
It's
it is
not
a
a requirement.
recommendation.
The reason for that is if it's a wire or a cashier's check,
The
we
money's
don't
there.
have to wait that 3 days if they do cancel.
Right,
10
10 days.
10 days, sorry,
10 days,
10
yeah.
days, if they do cancel.
Right.
And the other part of this is privacy for the borrowers. So those rules are part of that Frank Dodd Act. So that's why all the privacy rules about sending out emails that are encrypted or in a format, like we use DocuSign a lot, even if it's just to send something for them to review, so that they have access to it without it being hacked by someone else.
Secure networks.
Yeah, it's secure.
So is the contract being revised? The 1 to 4 now, because it's got closing date, it's got things like that, is that coming?
So the consummation date is just for the buyer to sign their loan documents. We're still going to consider our closing date like we do now,
Yeah.
you know.
On or before whatever you've put in the contract.
Right, yeah.
So,
But
which
it-
they're recommending not less than 45 days out
Yeah.
to start.
That was my question.
Yeah, 45 days.
45 days.
Clear as mud?
Can we vote no?
And time's passed.
That's why it was delayed.
That's
why it was delayed.
Yeah. Yeah.
Yeah, does anyone have, Frank or Dodd on
Yeah.
speed dial?
In my sights.
Marty? Maybe Dodd.
Alright.
They're both gone, They keep this message and they're gone.
They're gone too.
They're gone.
Alright guys, I'm gonna stand in the back of the room as everyone leaves. If you wanna leave business cards, I'm gonna try and make it as easy as possible. In the email, I actually include an image of the video, so that you can actually copy and paste that into the body of your email, so when it goes off to your clients, it has an image of a video, so where they know to click it, instead of just hyperlinks.
Carol, it's fun meeting you.
Thank you so